Well, I think the most concerning thing is that since Inge Thulin, the prior CEO, stepped down, 3M has really not performed anywhere close to its peers in industrials. I mean, we look across industrials. We've seen some amazing earnings prints this quarter so far. I mean, Honeywell last week was 8% core growth. Danaher, Dover, Roper. I mean, some really good numbers that we're seeing here. And then you got 3M comes in with a bit of a stink bomb here, and it's hard to explain.
Really? Okay. So we were talking earlier about the different segments that they broke out. Safety and graphic sales, industrial sales, healthcare, consumer sales. For your, whatever you have on your spreadsheet, where were the biggest misses? Were any of those numbers better than expected?
No, they were not better, and nothing really was better than expected. I mean, you don't expect healthcare to be as weak as it was. That was tough. We expected things like auto to be weak, but really, when you think about consumer, that should be a little bit more stable. And industrial. I mean, we have, we're forecasting up 6%, maybe at worst case up 5% core growth in the quarter for industrial overall, and these guys came in with -3. That's a pretty big delta versus our peer group.
Well, if all those other companies were less affected by macro issues, the ones that you mentioned, Dover and Danaher and the others, what is this? This is a 3M problem, then? We should not worry about the economy being slower than we thought based on 3M? This is purely go ahead.
I think there's 90% chance this is 3M specific, and the only thing that scares me is that this is a shorter cycle company. All of their products are things that can be inventoried and destocked, restocked, et cetera, and you could be seeing a fairly large destock here. And some people would say that these guys can be a canary in the coal mine because their products are so short cycle that when things turn down, they're the first to see it. There is some, there's some truth to that, but we have other companies that have shorter cycle businesses too, and they have not seen this type of decline. So I don't think it's broader than what we're seeing. I think it's fairly 3M specific. 3M has a larger emerging markets business than most of our average companies. They're really big in China, and it could be fairly isolated to those markets.
Do you think that the restructuring moves and the 2,000 job cuts, are they addressing the issues in an effective way? And is it going deep enough for what needs to be done?
Well, I've covered the stock for a really long time, and one of the things that 3M had historically done is they've been really behind on restructuring. So when things turn down, they're always, quarter, 2 quarter, 3 quarters behind. And and the reputation was always that it was a bit of a sleepy company that just didn't move fast enough and struggled to make the most difficult decisions. I think Mike Roman, the new CEO, is a little bit new in the job to criticize him. I mean, we'll have to hear on the call at 9 o'clock whether really a little bit of color around the results here. But look, I mean, the long-term reputation of this company is that they're slow to restructure, and when they do, it's oftentimes not enough.